Asian markets are rising this morning, even as US inflation came in hotter than expected. But European markets are heading for a mixed open as investors in the region are on tenterhooks, waiting for the European Central Bank's next rate decision later on Thursday. The central bank is expected to keep rates steady as economic activity in the euro area decelerated at a faster pace than previously expected. But a 25 basis point hike remains a possibility today. Inflation in the US now stands at 3.7%, but the EU's inflation stands at 5.3%. That's amid higher costs of energy. Let's get more on this now with Danny Hewson. She's head of financial analysis at AJ Bell. Thank you very much for joining us today. Danny, we are seeing a divergence at this point between the US core inflation, which is decelerating, and headline inflation, and that's picking up again. Now, how is the Fed going to handle this? That's a bit of a headache. What do you think the Fed is going to focus more on?
It will definitely focus more on the core inflation because that headline rate takes in those traditionally quite volatile things like food and energy. And it was certainly the oil price which made that big impact, bringing that headline rate of inflation in hotter than expected. Oil prices have risen about 25% over the past few months. And of course, that has an effect, filters through to the pump and also then starts to filter through into the stuff that we buy because so much is required just to make things and get them delivered. But it's the core inflation that the Fed has been really focusing on. That is the thing which has come down. That is the thing which their decision will be based on. And that is why most market watchers expect that they will hold rates steady this time.
Right. Interesting. And Danny, market reaction to US inflation has seemed pretty muted for now. What's the reason in your view? What are the next key data releases at this point that the Fed will focus on?
I think the Fed is taking a good look at every single bit of data that crops in. The big ones that it tends to look out for, another form of inflation measure, the PCE index, which it favors over CPI, that comes out after it makes its next decision. We also, of course, are always looking at employment data, wage growth. But the big thing that is impacting markets is that the Fed has not ruled out one more rate hike. In fact, it's very much saying that that could be on the cards. And I think it's that which it's hoping will keep consumers and businesses slightly nervous and stop them from going out and spending willy-nilly. And that will help keep inflation down. Because it is inflation, of course, which central banks are having to fight. That is what they have been put in place to do. And bringing rate up or down is the measure with which they can do that.
Danny Hewson, really great having you with us on the show. And now let's go to other top stories from around the world. Ratings agency Fitch has upgraded Turkey's growth forecast to 4.3% in 2023. It's also revised Turkey's outlook to stable, affirming the country's B credit rating. The positive assessment is due to the rating agency's assessment of the country's shift towards a growth-focused and consistent economic policies. Fitch has also noticed that funding from the Gulf countries and the World Bank will further improve investments in Turkey. Argentina's annual inflation rate climbed to 124.4% in August, the highest level since 1991. Consumer prices also soared at 12.4% in August, compared with the previous month. Argentina has been suffering from high inflation for years, but August marked the first time in more than 2 decades that the monthly rate reached double digits. And British chip designer ARM has priced its US initial public offering at the top end of its range, raising $4.9 billion. That's valued the company at about $54.5 billion, marking the largest listing of the year. ARM was taken private in 2016 following its $32 billion takeover by Japanese conglomerate SoftBank.